Hey guys, Kunal here, Bulls on Wall Street. Guys, I want to take a few minutes today to talk about the most powerful driver in the stock market, that is earnings. And my trading setup that I've been using every day for the last few weeks as we are in earnings season that can actually make you some money that's simple and easy to understand that you can utilize tomorrow. So first of all, let's think about what the heck earnings is and why it's important. So guys, stocks in short term, they move on technicals and news and people drawing squiggly lines on charts. But the long-term driver of stocks is earnings. Earnings is something that a stock has to do 4 times a year. They're going to announce what their numbers are, whether they're good, they're bad, but also give a future and forward guidance, which is the key. Oftentimes, stocks can announce the best earnings they've ever had, and the stock can go down, and vice versa. How to read these things is beyond me, but what I do know is depending on the market cycle, good surprises and bad surprises will hit a stock hard, and I can play the technicals on it, and that's what I'm going to show you. So today I want to focus on earnings breakdowns using an opening range breakdown setup. Now you can do this setup to the upside, but today I want to talk to you a little bit about the downside, and we'll do it the other way in another video. The reason I want to do it is that the last couple weeks, and in specific in this market cycle of earnings, the sentiment has shifted greatly. Stocks that had been on a huge run, that have announced their earnings, have been pummeled. All the big name stocks that you can think of are getting hit on their earnings. It started with Netflix and Tesla. They announced their earnings and all sorts of growth and, fandazzle stuff, and the stocks got hit hard. If you look at Microsoft, it announced its earnings, got hit hard. Even old Apple, your old faithful, your old grandma that you can depend on, right? With the chicken pot pies. Even Apple got hit, right? And if you look at Apple, it rarely goes down 5-6 days in a row like this. It's getting pummeled. What's happened is the stock market's gotten so extended, and then the leaders of that stock market that really were flying on earnings from the previous earnings season just a few months ago, I got so overextended that now they're showing this kind of weakness as expectations were so high. So what we want to be doing in this earnings season is when these stocks announce their earnings and they gap down and we see this specific setup, we want to take them short because that's where the money's been at the last few weeks. If you're trying to trade Netflix or Tesla long, right, it hasn't been working. If you've been trying to trade Apple long the last few days, hasn't been working. The money's been on the short side, and we want to always be flexible and learn how to trade both ways. So let's talk about the parameters of what constitutes an opening range breakdown. So I'm looking for a handful of things. Every single day on my TC2000, and I also use Benzinga Pro, I make a list of all the stocks that have earnings, that are big name stocks, that have the potential to move up and down, that have specific types of charts. So let's talk about what I'm looking for in this specific setup. To have an opening range breakdown, what we are looking for is a stock to open week minimum 2% or more, and then I want to see a sideways consolidation near the lows of that day develop and build out a range. This requires a minimum of 2 5-minute candles. If you are earlier than that, you're going to experience a lot of chop. So you need the gap down or a spike down at the open. Then you need minimum 2 sideways candles. And then when that clean opening range has been built, you can take it as it breaks below those lows with a stop over the VWAP or the 9 EMA, whichever is closest. Guys, I've been using this setup for over a decade. On your TC2000, and if you don't have a paid software program like TC2000, you can use Benzinga. Benzinga has a pre-market gainers and losers list. It's not updating probably in real time, but it'll get you the gist of it, and then you can kind of manually type it into your Thinkercrap platform or Schwab or whatever people are using these days. I'm just kidding. I have a vendetta against Thinkorswim for like a decade plus, and I'm having a lot of trouble letting it go. So they're no longer Thinkorswim to me. But regardless, you can use it on any platform you want. But if you go on TC2000, you know, we have a running list in the morning. It's called pre-market gainers. And essentially the parameters that I'm using are stocks that are moving around, minimum 2% up or down in the pre-market, minimum 50,000 shares in volume. And then I'm looking for stocks that are having clean daily setups where you're either breaking out or breaking down below some levels. And then I'm putting those on a list and identifying them for potential opening range breakdowns. So for example, a stock like a TDC today, right? TDC announced their earnings, and you see that spike down right at the open, just a small one. It doesn't have to be anything big. Frankly, when they're like 15, 20%, they get a lot harder. When they're smaller, you get the rest of that room. So look at TDC, what happens here. You get that spike down at the open, and then you got one candle, two candle, three candles sideways, right? You're building out that range around that 46 mark, and then what happens? Boom, you break those lows, you want to put a stop over your VWAP, and now you're into this thing for the shred zone, right? And as always, when you get kind of 3-to-1, 4-to-1 reward to risk, start looking to take some off the table. I like to piece out of mine, and then you can trail your stop loss down using EMAs like the 9, or just lower lows, you know, lower highs, and kind of stair step it down. I tend to be a quick trader, so I cover half, then I cover a quarter, and I cover a quarter. The opening range breakdown is about trading the open, right? It's not like this is an investment setup. It's about the open. The open's between 9:30 and 10:30. So don't marry these things. You want to come in hot, hit the lows, take it out, and then move on to the next one. If you take a look at something like this, ICIU, they announced their earnings. They're getting pummeled on a big gap down. You start to build out a range in that first hour, and then when you take out that range on the bottom, now you start to get the trend down on this. Guys, you can do this on any type of stock. It doesn't just have to be tech stocks or biotech stocks. You know, I'm looking for a specific type of chart, and then when I see those clean ranges, I'm going to take them down. In this specific market, guys, almost all the hot stocks that everybody's talking about has been getting shredded on earnings. They've been gapping down, right? Tesla, Netflix, today was Palantir, this TDS. There's been a whole host of them. UPST, which has been the hot stock and my favorite stock to trade this year, is going to open down 20% tomorrow. These companies, as the market starts to mature and shift, we're going to find new hot stocks, and the old leaders tend to get pushed down, and we get some new ones start to pop up. So guess what? We had a lot of fun trading these Teslas and Nvidias and, you know, so on and so forth. But now it's time for them to take a little bit of a breather, a little bit of consolidation, and we're going to find some new ones to trade to the upside. And so while that's all happening, you need to be shorting. You got to learn how to short. In the last few years, I made just as much money shorting as I have longing. So moral of the story, opening range breakdown, 2% gap down or move down in the pre-market. Then you want one candle, two candles minimum sideways on a 5-minute chart. Then you can take out that range. I do not like using 1-minute charts on this stuff, guys. You gotta you gotta have damn spirit fingers to trade 1-minute charts. I mean, I'm seeing designs and patterns and the Lord himself sometimes when I use 1-minute charts. It's really fast and it gets me really into a scalpy mentality. And even though an opening range breakdown is a scalp setup, we still want to always be trying to take chunks, right? We're in the business of making dollars, not pennies. So guys, hopefully that helps. Let me know if you have any questions and smash that like button.